Okay, so I think most people they are getting affected in the way that they enter trades and in the way that they exit trades. Generally, people just jump in trades. They don't want to take time to analyze the market, to see where price is going, to see where price came from. They don't have any reasons actually on why they are trading. So by that, I would like to shed more light on how I also do it when I'm alone, so that other people get to familiarize with everything. Okay, so let me change my background like this. And let me do this. Let me put my market watch here. Yes. Okay, so I'm starting to share my screen now. I'll be sharing my screen now. Okay. Right. So the correct way of getting into trades, or the correct way of analyzing the market, is through a method that we call top-down analysis, whereby we analyze our trades from a larger time frame, then we scale down to a smaller time frame. This generally means that we always have to respect the larger time frame at any given point in time. We respect the larger time frame. The larger time frame is the one that gives us our overall move. And in as much as we might want to go against the larger time frame trend, then we get hit. For instance, this is my day one chart. And zooming out, please, the person who's writing on the screen, Charlie, please don't write on the screen. The screen is me only. So the way that we analyze is we analyze from the larger time frame, scaling down to the smaller time frame. Like for instance, we have this trade that we have here. This is boom 1000. Okay. From the methods that I've been teaching you and the data that's on my YouTube, the free data, of course, I said that our market moves in highs and lows, and breaking those highs and setting up new lows. I say that the market gives you a high, right, a low, it breaks this high to continue in an uptrend, it sets a new low, most probably that new low respects this previous high, it goes up, it breaks this high again, then gives you a new low, like that. I remember I said we will reach a point whereby we fail to break this high, we break the previous low, then we start making new highs, new lows, new highs, new lows in the opposite direction. Okay, right. So as you can see, this is what price does almost always. Almost always. It moves in this in this uniform sequence of events. So as you can see here, we had a high that was made here. We made a low, and for us to continue in an uptrend, we made another new high. Guys, please don't write on the screen. Please don't write on the screen. Screen is mine. Okay. So as I said, as I said, we made another new high here. And after making that high, we had to make a new low. And if you draw a line here, we are going to see that this low was at a point where we had the previous high, right? So someone might come and say, oh, you know what? I now have a new high by seeing this, but we haven't broken this high. So this high is still valid. We want to analyze the market from a larger time frame to a smaller time frame. Right? But as you can see, this high is the high that we are saying is the new high. It's not valid. Why? Because it didn't come and break the previous high. So for us to be able to break the previous high, we draw a line here. And as long as we don't break it and we are playing below that price point, then that means we haven't broken that high. So price is ranging between this high and this low. And if you come again, you draw a straight line like this, price didn't come to break the previous low. So it's ranging within this price, this range. So we call this a complex pullback, whereby we have a valid high and a valid low, and price is playing in between that. We call it a complex pullback. And in the event that price comes and then starts going below this, then we say we've broken structure to the downside, right? And if we break this high, going to the upside, then we've broken to the upside, right? Okay, now we want to come back to that point. So we broke this high and we made a new high here. And for us to call this a valid high, we must also have a valid low for that point. And as you can see, this low still remains valid. And this low that came in the future, if we draw a straight line again here, if we draw a straight line again here, we can see that it never broke below the point of the previous low. So this high is valid because it has broken this high, and this low is valid because it's the low to this high. You understand? So for us to say that this law is no longer valid, this law must come and take it out. Then we say we are now in a downtrend. But that never happened. Price came, respected this point, then went up. So now we have a low of the new high, which is this high. Why? Because it broke the previous high and it gave us a new high. Okay, I want you to take note of that very carefully. Okay, so us having this high means for us to say we are now in a downtrend, we must come and break this low, right? So again, we have another complex pullback here, right? But we can say that our market in the current situation on the day one chart, it's in an uptrend. On the day one chart, it's in an uptrend. This is for 1,000. Why? Because we are failing to break previous structural points. Right. Let me share some tips. If you are someone who trades using, what you call this, if you are someone who trades using trend lines, I personally would recommend you to start taking sales somewhere around this point. If it happens that it has broken this channel, then we continue. Why? Because we've broken our previous major structural low. Okay. So now we have a valid high, we have a valid low. And so far, I can't say this low that we see here is valid. Why? Because it doesn't have a valid high, because this high here hasn't been broken yet. So we are somewhere within where we are somewhere within this range. Even if price comes here, we are still in a complex pullback. Even if it does this, we are still in a complex pullback. It's either it must go up, or it's either it must go down. It's either it must break this high, or it's either it must break this low for us to rule out that in day one, our overall trend has changed, or it's continuing in an uptrend. Right. Now, me seeing that my trade is going up, or my trend is going up, I need to align myself with the trend direction. I need to also be buying when my trend is also buying. I don't need to be selling when my trend is buying. Okay, so let me remove all this mess that I've done here. And I want to remain with this. Now, when we are having pullbacks, simply a pullback is this. Let me show you this. Let's take it from a bigger picture. This is an impulse. This is a correction. This is an impulse. This is a correction. So I'm hoping to see another impulse, which breaks this and another correction. Right. So when price pulls back, it's either, for example, let me show you this. Let me do this. Let me take out my feed. It's either I'll come, let me do it in a way that you see. Sorry about that. Since I say this is my low and this is my high, I'll take my fib and then I'll draw it like this. Right. Me being a fib trader, if I know that I expect a reaction around the 50 level, the 61 level, and the 38.2 level. Personally, I also respect this level that's in between the 50 and the 60, which is somewhere here. Whenever I get there, if I am buying, I buy it. If I'm selling, I sell. And as you can see, price came, it bounced back, it came back to that point, it bounced back again. So anything that I'm taking from now is in the hopes that I'm buying, so that I align myself with the trend. Okay, so this is D1. Now, so my areas of interest on my D1 are these. It's from it's from this 50 to this 61. So I mark it like this, and then I switch on to a smaller time frame. What am I looking for? I'm looking for buy opportunities, right? Okay, let me erase everything now. I think we can see where now our picture is going. I now want to make things a bit visible for some people that can see. Now, I can pretty much well say, if I look at my H4, I've been ranging around this area. And even if I take my tool, even if I take my drilling tool like this, I can see that I've been in this area, right? So I've been rallying down, rallying up, rallying down. So I'm expecting a rally up, right? Since I'm trading an uptrend, right? So if you zoom quite carefully like this, you can see that let's start off from here. We broke structure here in H4, we broke structure here in H4. You can see that I broke structure there in a smaller one, then I'll take this major one, a low, I broke structure, a low, I broke structure, I broke that low again, and came back in the zone, a low, right? So in this time frame, there is a point that I bought, and I broke structure now to the downside. Why? Because I started noticing break of previous lows, lows, highs, lows, highs, lows, highs, lows, highs, lows, highs, lows. So in my H4 now, for me to completely rule out that in my H4 I'm buying, it's either my price should come, break this previous high here, and then now I know that I've changed my direction in H4. Or it's either it's going to give me a new, it's going to give me this high in another new low, in another maybe new high in the low, but as long as it comes and breaks a previous high point, then I know that it's changing direction and it's now going in the upward direction. Right. Remember, break of structural points starts from small time frames and it moves on going to a bigger time frame, to a bigger time frame, to a bigger time frame, to a bigger time frame. Okay. So now we have learned that as we can see, we work with what we see. As we can see, we have a high here, we have a low, sorry, we have a low there, we have a high there, and generally we were in a downtrend in H4. But let's not forget that in D1 we are rallying up. So it's either I'll come, fail to break this point, continue in the upward direction, or I'll come, break, and wait for a scenario where it comes and breaks and then goes in the direction that I'm anticipating. Okay, so after I have done this, now I know that so far in H4, I'm in a downtrend. So I switch on to a smaller time frame again. Switch on to a smaller time frame. I know that my larger time frame is telling me that we are in a buy market. But in H4 now, I switch on to another smaller time frame. In this case, this is my H1. Right. I'm trying to align myself with whatever is going on. Right. So now, in H1, what do I see? In H1, I see that I was rolling down, I had a low, high, low. That broke this previous low, a high, and another new low that broke this previous low, and a new high, and this is and another new low here. Sorry, let me do this. Right, and another new high here, which is a pin, and then I broke it to the downside, and another new high here, small high, and then I broke to the downside. I came. Now, the high that I'm now hoping to break is which high? Is this high in H1, which is here. And now this tells me that, you know what, bro? We are now switching up in a upward direction. So in H1, I've broken structure and I'm now anticipating that it goes up. Why? Because I have this high that was broken. I have hence another high here that was created and it was broken and we made a new high here. We never broke this low, which was here or here. So now I'm anticipating that I start making a new high, a new low, right? And then another new high, another new low, another new high, another new low. And the way that I target my take profit now is, this is just a simple trick that you can use. You see these wicks here. They came and then they tested these wicks that were here. But if you look closely, there are other wicks that were not tested. Okay, let me do this. Or that we haven't yet tested, right? So now I'm looking forward that price comes and test, most possibly this week, or most possibly this week here. So I anticipate that my boom will boom up to this point. That's my first take profit that I will take based on this trade. Sorry for that. Right. So now I have seen that in H1 I've taken out this high. So what do I need to do now? I need to switch on to another then smaller time frame, let's say M15. Okay. In M15 now, I start looking for areas where there is much of what I can say point of interest, points where spikes have been initiated. I'm starting to look for things that make sense now. For me, what makes sense is this is a flag that might possibly form here. And what do we know about flags that face down? We break them. Going where? Let me do this. We break them. Going where? Going to the upside. So someone might come and say, this is a resistance. This is a support. This is a support. So I mark my point here. Where are you? I mark my point here, right? I'm anticipating that it comes in this zone and then it starts spiking up. Why? I have a flag formation. Flags form. Flags that face downwards. What do we know about them? If a flag faces downwards, that means it's initiating an uptrend. Right, simple as that. Now I've come to a point where I know I just have to wait to strike. That's all. So I have taken it from a larger time frame, going on to a smaller time frame. So I can safely say and confidently say that this thing will spike. It will break this flag and then continue going up. If you look at your H1, I'm anticipating it's going to target this point. You can even write it down and to remind me that, Kuda, what you said that time really happened. So I'm anticipating it will come up to this point here, which is 12,967.2110. 12,967.2110. It will definitely come in. I know for certain. Okay. So that's how you do your top-down analysis. And if you want to enhance it more, that's when you start coming into M1, into M1. Then you start drawing your trend lines in M1 as well to see whether your lines are gonna get broken or not. Maybe in M1 you start tracking a trade when it breaks this trend here. But for certain now we know that it's going to go up. So let me erase that. Let me go to the comment section because I know some guys have a lot of questions they want to ask. Okay, I'm seeing messages now of people who are saying there's no sound. Sound is there. I can even see it on my monitor. That sound is there. Okay. Okay, some can hear sound, some cannot hear sound. Okay, fix your microphone. Fix your microphones on your PCs. I don't know what you're using. Yeah, when you're analyzing, you always start from the higher time frame, but when you get the age of it, using the smaller time frame. When you now know what you're doing, you'll find yourself starting to trade from smaller time frames. You just open a smaller time frame and say, oh, wow, okay, this is what's happening. And then you enter. Okay, let me attend more questions. When analyzing, do we always start from the high time frame? Yeah, we always start from the high time frame. That's how I do it. Okay, let me answer another one. How does the Fibonacci expansion work? Okay, say you have placed your Fibonacci like this. Let me answer that one quickly. Say you have placed your Fibonacci like this, okay? And you take a trade from the 61.8 level. Let's say here, you press a buy, right? Then you want to see your take profit. We use what you call a corresponding level. Remember, when you're going to the up, when you're going up, you take your Fibonacci from the bottom going up, and when you're going down, you take it from the bottom going down. So for you to see your expansion level, you now have to take your Fibonacci 2 and use it in the different direction, like this. Okay, so just because you entered at 68.1, then that means this one will be your TP somewhere here. You bring your TP to the corresponding 161.8% level. And say you've entered at 23.6, you also take your TP and you place it on the 29.6 level, corresponding level. That's how you use the expansions. Okay, there's someone who's saying, say, Kuda, how do we know that this is where the price will start to spike? Sometimes I wait for it to reach support or resistance, but it doesn't get there. Then I miss the trade. Please help. we have impatience. Sometimes it's impatient. Why? Sometimes it doesn't necessarily mean you have to catch a spike as it is. Sometimes you have to wait for price to give you a reason or to give you a signal first that is now starting to spike. You know, the problem that kills us is when we come and we place our resistance here, we expect price to spike exactly when it gets there. But as for me, if I'm trading on M15 or if I'm trading on M30, I wait for price. Right. Let's say on M30, my chart will be like this, right? I wait for price in M1 to come, spike, fail to break the previous high, spike and break this previous high, and show me a break of structure in M1, then come again, then continue spiking. That's when I start taking entries. Soon as I see that I've broken structure, I've came back to that high, that's when I start taking entries. I don't necessarily start taking entries here. I wait for it to spike, fail to break the previous low, break the previous high, come retest it, and then continue with it. Simple as that. Even if it's V100 in your M30, it can be like, so those W's that you learn, they make sense because in M30 it will be like this. And in M1, you can actually see record structure, then you continue. So sometimes it's all about patience. Wait for your trade, wait for it to give you a signal, continue with the direction that it has given you a signal that is flowing. Okay, I think I've answered. Would you teach a smart money concept? I'll get more into smart money concept, but some of these things that I am also including, they include smart money. If you go on YouTube, you will see that I've also done some videos of smart money. Sekuda, how many time frames are sufficient to have a good in most probable analysis? D1, H4, H1, M15, M5. So you can say 5 time frames or at least 4 time frames. Yeah, you can use it trading against spikes. Breakout structure doesn't care if it's a spike or not. Breakout structure is breakout structure, whether it sticks, whether it's boom, whether it spikes. You can always trade structure. Structure doesn't depend on the type of commodity that you're trading or instrument that you're trading. Shekuda, how many? Okay, I answered that one. When analyzing, okay, I answered that one as well. I think I've answered. Okay, there's someone who's asking me how to plot support and resistance levels. Our meeting might end anytime soon because of our time, but this is how you mark support and resistance levels. That makes sense. Let me show you just quickly. You see now, you see that we can have something like this, right? And let me do this. And then this can be my resistance over here. But this is not my full resistance. Why am I saying that? Because I believe in that resistance zone, we also have to leave another space, right? So if we zoom in on that resistance,